So, the last 2 weeks, we have been doing kind of I would say, kind of an experiment, trying to trade only the Asia sessions in BTC USDT. And the results have been pretty, um, I would say, either amazing slash surprising, because generally people think that it's not exactly very viable or even worth to trade the Asia session just because of the lower volume. Uh, but what I'm about to show you guys um, during the next videos, because I'm gonna do one video for each of the sessions that we did. We did all of them live in the Discord. We were live trading them. The results are pretty nice, and it's essentially based on the context of whatever happened during New York, and then focusing a lot on small price action moves, but that actually have very interesting risk to reward trades, because we're going to be using the 1 minute order blocks and fair value gaps, so it's very small entries. This is only obviously viable if you can do a little bit of leverage. I would say like 20, 30, maybe a little bit more, but I wouldn't say more than that is necessary. And I'll explain that in terms of risk management as well. But overall, yeah, it's pretty nice, and it's a little bit less manipulative than, for example, the New York session, which makes it a little bit more predictable. So if you're someone who actually is able to trade during the Asia session, you might enjoy this. So this was the first session that we did. It was on the 14th of April. It was when we had a very strong drop to 59k, in this case just below 60k, and it was a liquidity grab of a previous previous low that we had. So essentially, that the liquidity grab, that drop, ended happened pretty much near the end of the New York session. When it did, the liquidity grab wasn't all that powerful. The reaction, I mean, even though it was like a bounce, an immediate bounce of $1,000, but you know, we're talking about Bitcoin, so that's kind of subjective. But the interesting part about it is that when dropping from one low to another, we had divergences on several indicators. So I'm gonna show. What I am going to show is going to be using a custom indicator I configured, but this is basically just a TDI RSI with a Bollinger Band. To be honest, I don't really use the Bollinger Band much, but it is a good visual aid most of the times. It's just a personal preference. You can probably use a normal RSI, something like a Cypher B, any version of a Lux Algo oscillator, all of those more popular oscillators that you see on the market. Some of them free, some of them paid. Probably most of them will show you the same divergences that I'm going to be showing you here. And in any case, the divergences is just to give you a heads up most of the times, because the decision will have to be made based on market structure anyway. Or at least that's how we are doing it. And based on the success that we've been having, I would say it is the way to go, but for sure other strategies should work as well. So to explain you guys what we did, this is a long that I'm gonna explain that has some meaning and could have been taken. We didn't, to be honest, because I was afraid of the possibility of coming to take these equal lows before going up. But we did take these two, this short and then this long, which we closed considerably early. The target was to get these equal highs here. So what's the logic behind them? And let's go one by one, and I'm really gonna zoom in on the price action to give you a little bit more of an in-depth explanation. As I said, this was an SFP of a previous low, a very strong low. When we started the reaction, you can see we had what retail traders often call this as a triangle pattern, right? When price starts squeezing. And essentially, what could have been done here is based on the fact that price did a hidden bullish divergence, meaning that price did a higher low and the oscillator made a lower low. Okay, this is called a hidden bullish divergence, and generally means, well, not generally. It means that it's a possible continuation pattern. What I mean by generally is that it generally does work, at least for a short period of time. And so this was a possibility in the sense that you had a bullish order block there, and after that you had this fair value gap that was tested, and as it is a vector, it is of high chance that it comes back to test at least a little bit of the vector and then goes up. So two possibilities here: either this bullish order block, which is a little bit more of a risky entry, and then this fair value gap. The trade was good enough at least until the first vector that existed with the block. So this is the last 1 minute that has an order block there. Of course, that you can also take profit on these ones, for example, as they are also vectors, order blocks with vectors, and we also had a BPR over there, which actually caused the reaction as well. Let me just change that text. So, as we are going up, eventually it stopped pushing on this guy, and the interesting part is, as it was doing that, and this is a pattern that we see very, very commonly happening during Asia, we have a regular bearish divergence between the two highs, and then we eventually change structure. As we confirm the change of structure, and the change of structure to me with this div makes sense if you look at it from a triangle perspective. So the div happens between these two lows, these two highs, sorry, and the lower low of this divergence, this price action, this piece of price action is that. So the divergence's job is to push price lower than this. As it does that, we have this last pivot point created that also has a fair value gap there, and so this entry was done with the fair value gap, taking into account that price could maybe not go past that breaker block. So it is not able to go. It eventually starts going down. Our initial target was just taking out this vector and possibly reacting to that order block. So our job was done here. The simple reason for that is this is the higher probability setup, right? Just recovering the vectors, and this is the safest TP. This trade alone, using the top of that order block as a stop loss, is 4.75 risk to reward. If you risk 1% of your balance, this means that you just got 4.75% growth on your account, right? Which is already really good for a trading day, right? If after this you believe in the continuation trade, you can use that small BPR again with this, which we didn't do, admittedly, but it's another possibility, and target this low again, and that would be another 4.99 risk to reward. So again, risking 1% of your balance would be again another almost 5% growth on account. As we come back here, we are not able to take that low, which is very, very common for Asia to leave some easy liquidity for a session that happens next, which in this case is London, right? This is very, very common to happen. which is, by the way, one of the reasons that a lot of times taking profit either on lows or order blocks is a very good idea, because it might not be able to go past that. And after creating these equal lows, we change characters again. After changing characters again, we have another possibility, right? So another vector with a block. We can say even include all of that with another block over there. And so that has to be taken into account for a stop loss. And when we were starting to drop, we created these equal highs too. So that was our target. And this trade, again, using the start of the fair value gap, might as well just mark it out there. So this guy, as such, this was another 3.72. So for example, this simple day, just using market structure, not any fancy indicators, and just using what the candles tell us, right? Using the gaps, using the blocks. This day netted us 4.75 plus 3.72 risk to reward. That's a pretty nice day. Almost 10R, almost 10% growth on account, with a possibility that we didn't take, admittedly, but this would have been another 6.13. So that would be plus 10. This eventually continued, but we generally close trades at around 7:30 a.m. because macros, the first macro of the day happens here at around 7:30. So when that happens, generally we get either accumulation or expansion. Sometimes the expansion is against our trade. So just to call it a day is usually a good idea to close it before that macro. But even if we had gone up to the 7:30 timing, most we would have gotten would be 4.81. So the difference is not all that great anyway. Admittedly, sometimes, price can just continue their merry way. And in this case, I don't even know how much it would have gone. Yeah, but if we had left the trade open, we would have eventually got break even again. And yes, of course, price continued, but this is a whole new session, a whole new price action to react from. So this is just one of the examples. I'm gonna launch a total of I think we have already 13 Asia sessions done. I'm gonna show you a video for each and every one of them, so you guys can also learn the patterns that we have been trading with and having some really nice results with it. So stay tuned. If you have questions, if you want to trade with us live, you can just join the Discord. At least for the following month of April. Sorry, following month of May, the current month of May. It'll be free, completely free. We will be introducing memberships sometime during June. That will be announced beforehand. But at least until then, trading sessions live with the rest of the community are being done live for free. You can just join and either trade with us or learn something, or brainstorm your own ideas if you have any. So I'll see you then. Hope you guys stay tuned for the next, and yeah, see you next time. Bye bye.